Hello guys and welcome back to the YouTube channel. First of all, I want to thank you guys for the support on the previous video. If you guys haven't seen that, go check that out. Obviously like, comment and subscribe, all that kind of good stuff. We are back with part 2 of analyzing GBP USD. The date today is the 27th of August. It's been a week since I previously updated you guys on that last analysis. A lot has happened in that time. A lot of movements have gone on, and I'm kind of excited to dive in and show you what I'm doing now moving forward with GBP USD. With that being said, let's jump into it. Okay guys, so as you can see from the previous week, the market has moved quite differently to how I anticipated, and that's exactly why we set up these buy stops, sell stops, and these kind of positions that we're looking to take ahead of time, right? Because if the market doesn't play out how we anticipate, we're not just jumping into the market. And that's what I was kind of getting into last week about being responsive in the market and not just trading based off of, your emotions. It's very important that you trade that way for these exact reasons. If I were to have just jumped the gun, taken the trade because my emotions are saying, right, I think it's going to head to the upside, I'm just going to take a trade anyway. If I did that now, looking back, it would have 100% hit my stop loss and I would have ended up losing money. So that's why it's much better just to wait. A day of not trading is better than a day of losing money. So with that being said, guys, let's jump into it and see what's actually happened. So when we last looked at this, we obviously had this buying position set up. We were hoping to ride the market towards the upside. The market was very much in kind of this consolidation area. There wasn't really a huge amount of movement going on. It wasn't very volatile. It was quite stagnant. Overall, quite boring and very, very passive, right? That's not really the sort of market that you want to be in. You want to be in those markets or those trends where it's quite continuous, right? Either to the upside or the downside, wherever it might be. You want the market to be continuing in that direction. Whenever it kind of becomes stagnant, right, up and down, like so, it makes it very difficult to trade. It's so much harder to make any money in the markets unless you're trading based off your emotions, and then you're getting, I guess, somewhat lucky. But from a probability standpoint, from a objective standpoint, and sticking to a trading plan, that's not how I trade. That's not how I move in the markets. I mean, that's why I didn't take any trades based off of how the market was last week. I'm kind of happy I didn't though. So let's see what's actually happened. So from that consolidation area that we actually see, we did have this buying position set up in the hopes that the market was going to break out of this kind of consolidation area and then head towards the upside, create some new higher highs and higher lows. I'm not saying the market isn't going to continue to do that, because we never really know what's going to actually happen inside the markets. But looking at the analysis on the screen as of right now, the best thing about it is we have actually now had a breakout of the continuous data that we were collecting. So if we look at this market, we had a lot of up, down movement. The market actually reached this specific point right here, which happened for the third time. We had a rejection there, obviously there, and then this one here before the market then rejected and then started to move to the downside. Once we had this top level of resistance, that was our key, or that was the market's way of saying, right, this market's going to get dumped now and we're going to fall to the downside. Of course, once it got to this sort of area here, there was obviously a good chance the market could have went back up and continue that overall kind of direction towards the upside. Overall, looking at the market, it is still on an uptrend. Of course, we do still want to be looking for buying positions unless the market gives us a very clear sign that it is going to flip direction and start heading to the downside. So now that we have had a breakout, aka this little area right here, that's telling me that we now have a break of pattern. I love it whenever this happens, and it actually brings me onto the subject of talking about my sort of trading plan and how I trade. So I am very much a breakout trader, but I solely do it on a continuum of movement. So if it's moving to an uptrend, I will only be looking for breakouts towards the upside, and vice versa if it's on a downtrend. I will never sell on an uptrend and I'll never buy on a downtrend. That's just, you're going completely against the trend at that point, and you're kind of walking into a one-way street of disaster, and it's just not where you want to be inside the markets. But we have got right here a very nice breakout forming. Bear in mind, for those experienced traders out there, this could just be liquidity inside the markets. I mean, it could be the institutional traders, the bigger traders, the whales of the market, trying to trick the retail traders, us, into buying or selling this pair, primarily selling because it has broken out to the downside. It's the way that they can catch out retail traders like ourselves, and it's a way that they can make money off of us. It's not something you want to be jumping the gun into until you get extremely strong confirmation that the market is actually going to continue going in that direction. We have got a very nice breakout of this daily trend line that we drew up last week. So if we just look at this, we can see quite a nice breakout. So this is in fact a breakout, right? So we have a very nice pattern forming previously, and we had one right here too, this little wick. And now looking at it, price has broken out of that area, right? Price has gone way below this trend line, and this could be a signal, or a very, very strong signal, that the market is changing. It's changing trends. The market wants to start heading towards the downside, and the bears are now in control. If you look at the overall direction of the market, it is still overall heading to the upside. With that being said, I still do want to be looking for buying positions. So what I will do is I will go further back inside the market, and I will look for more reasons to why the market might head towards the upside. I'm going to break this down into the next session, so I don't really want to do it in this, but I do want to touch on exactly what's going on inside the markets and how we can potentially capitalize on this movement and potentially make some money going forward. So now that the market's broken out, let's break it down into the very, very short time frames, such as the 15 minutes. We had a lot of stuff going on. We have a very nice pullback going on, right? So as I spoke last week, the markets move in those phases, right? Like such. The reason they're pulling back or rejecting these kind of key areas, I grab this, rejecting here, rejecting back on the higher high, so on, rejecting, so on, so on, right? The reason why the markets are rejecting these areas is because of key levels of support and resistance. Here, 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 here. We can see how that's moving, right? We have this nice little downwards trend. The market needs breathing phases, right? It needs a phase to pull back so that it can then continue its overall direction. A lot of traders, especially emotional traders, whenever they see this sort of pullback happen, they close their trades on a loss or for a very, very, very tiny profit if they're in one, solely because the markets are pulling back, right? The markets do that. They move in these phases. They have like breathing phases so that they can then continue in that overall direction to wherever it's going. This is exactly what I think is going to happen going forward. So we had our breakout towards the downside. We can see that this is our daily trend line. We had our breakout past here. We have our very nice pullback to that same area, and then the market goes, pulls back, goes, pulls back, goes, and right now it's kind of around this area where it's also pulling back again, right? It's having another breathing phase. This was a Friday movement, so bear that in mind. The markets tend to be a little bit slower on a Friday, and that's just the way how markets move. But right here we have a pullback going on. Right, I don't want to start to congest my screen with lots of stuff and start confusing you guys, so I'll try and keep it basic. But with that being said, the markets are moving in the phases that we anticipate, in the ways that we've seen happen multiple times inside the markets for however long they've been around. We have a very, very nice pullback right here, and I think that is almost being used as a slingshot to head towards the downside to create a new lower low, right? Maybe the market is now starting to form to the downside. We haven't got enough data as of yet to say that the market is switching and it is forming a downtrend. But once we do get more confirmation, that's when we will then look to start taking a sell inside the market. With that being said, what will I look for? I think what I will be looking for is a new low to be created. So this is our newest or our lowest low as of right now. This is our lowest high as of currently, and we're looking to create a new lower low. So we want to see the market get down to around this sort of area. If it comes anywhere down to, what's that, 1.25178, if it comes down to around that area, I will then say that that's enough confirmation for me personally to jump into that market and potentially ride it to the downside. So it is solely a waiting game. But how can we play this? How can we set up our trading positions ready for this? We grab our short position, we set it as such, we set our stop loss up inside of our trend line, and the reason why we do that is because our strongest level of resistance as of right now, and we set our take profit down to create a new lower low to here, right? The reason why we set it here is because this area right here is where our lowest low was previously, and as we know, if the markets continue in that direction, we get new lower lows, right? They move in those phases, as we mentioned. They go, lower low, lower high, lower low, lower high. Write that down, guys. Memorize it, understand it, and prioritize that inside your trading plan, because it will help you massively when it comes to setting up your trading setups. For that being said, we want to be looking at creating a new lower low if the market does, first of all, give us more confirmation that it is pushing lower, we are outside of this overall trend, and we have got a break of structure. We have got a break of pattern very clearly. Anyone with a set of eyes can see that. And I want to be looking for just a tiny bit more confirmation first before we then jump the gun and get inside this market. Say if I jump into the market now based off of emotions because I feel like it's probably going to push in that direction, it might be a risky move, and the market still has a chance to push back to the upside. As I mentioned earlier, we have liquidity inside the markets. These institutions very much trick us retail traders on a daily basis inside the Forex markets. So we have got to be very wary about that. We have to stay on our toes and ensure that that's not happening to us, and that we can actually get out of the market with a strong probability that it was going to move in our favor in the first place. Okay, guys, so that is essentially what I'm looking for inside of the markets. I am just waiting for a new lower low to be created. Once that happens, I will then be taking my position and riding that market towards the downside. I'm a little bit disappointed it didn't continue towards the upside, or it still might, but I'm a little bit disappointed it didn't do it this week, because I would have really, really liked to have rid that to the upside and hopefully made some money. That is essentially all I'm looking for right now. I'm just waiting for the market to do what I want it to do, and then I will get in the market, right? So I'm acting responsive to the market, and I'm not trading based off of emotions. I'm just getting in because I feel like the market's going to go in a specific direction. Never trade that way. It's very easy to trade that way because obviously you have to be in the market to make money. But at the end of the day, you need to start off with realizing that as a new trader, or as even an experienced trader, your goal is to not lose money. Don't lose money, make money later. That's how it works. That's going to be it from me for this video. I hope you guys enjoyed. If you did, please like, comment, and subscribe. With that being said, I hope you guys enjoyed it, and I'm out. Peace.